Today is a very special day indeed. It is Tun Dr. Mahathir's 93rd birthday, following which we have seen remarkable changes that is happening within the country. To discuss the effects this has on the markets, joining me is our international commentator all the way down from Cyprus, joining us yet again in Kuala Lumpur, Jameel Ahmad of FXTM. Jameel, as a foreign commentator and a foreign observer to the ongoings of Malaysia right now, can we get some initial thoughts into what you think is good or bad that is currently happening in the country?
Thank you very much for having me. It's always a pleasure to be hosted here. Generally speaking, most of the change has been positive, has been positively received. Now, the markets behaved negatively over recent weeks and months since the election, but not because of the election itself. There's huge concerns in the global market about a potential trade war between the two largest economies in the world, the United States and China, which has had a huge impact on market sentiment. We've seen a lot of risk appetite being wiped away, which means investors are less attracted towards taking on risk, which means they're less attracted towards investing in the stock markets, which means emerging markets, and later on emerging market assets such as the emerging market currencies, which includes the Malaysian ringgit.
Of course.
So this is what we've seen over the past couple of weeks and months, that despite the ringgit having a very positive first quarter of the year, it was up nearly 4 or 5% against the dollar at one stage. Now the ringgit has surrendered its gains. So on that headline, it does not look so positive. However, during this time of volatility, Malaysia's actually outperformed some of its regional peers. It's outperformed Indonesia, South Korea and Thailand. And year to date, Malaysia is the second best performing Asian currency, and it's the best performing Asian emerging market currency. In general, emerging market currencies have been completely whacked from this trade war dispute between the United States and China, where they're really suffering. There's been some real pain for emerging market currencies, and the ringgit's been caught up in this.
And of course, we've had statements coming in from the newly minted Minister of International Trade and Industry, Daryl Liking. He has said that he is closely watching the trade negotiations or even trade war that is currently happening between China and the US and how it might impact us. And he did say that things might go unfavorably in our favor, in Malaysia's favor, because we are trading quite heavily with both these countries. How do you think the trade war will affect predominantly the domestic market in Malaysia?
I don't think the trade war can be underestimated. And what we've seen so far is only volatility in the market, both in the capital market, which the Malaysian stock market also suffered in. Emerging market stocks in general suffered their worst period since November 2016 when Trump won the election. This included the local exchange here. Emerging market currencies have just had their worst quarter since 2015, which takes us all the way back to US interest rates actually being raised off their historic lows. So we definitely can't underestimate the risks. The problem right now is that it's only causing market volatility, and nobody can say for sure what impact it could have on the global economy. And this is because nobody knows how far this dispute between the United States and China will potentially go. And it doesn't just include these two nations. The European Union's involved, Canada, Mexico, and the United States is really embracing this protectionist agenda from the US president. And it's a severe risk to global growth. We've not seen a risk like this in the markets since before the global financial crisis. So this is probably the biggest risk of this current decade. In terms of how it could impact Malaysia, emerging markets in general are huge export economies, hugely reliant on global trade. We have the potential here for global trade to slow down, which means that Malaysia can be caught up in a headwind, similarly to the other economies in this region. This is where the impact is for now, and whether it will really deteriorate any further depends on how far this dispute really goes.
The guidance given from some of the research houses in Malaysia shows that ringgit could drop as low as 4.2. Currently it's trading at 4.02. But taking a leaf of what you just said earlier, which is that we are a largely exporting country, do you think that this is actually, there is a silver lining towards the whole conversation here with the ringgit falling at 4.2? Wouldn't this be good for our exporting companies and some exporting economies?
I think that the call that the ringgit could trade all the way to 4.2 is quite a pessimistic one. That's really embracing this notion that this trade will be very bad, it's going to get worse, it's going to cause quite a lot of turbulence to the global economy, whereas all we've seen so far is a global market, because it's going to take some time to really decipher what impact this is having on data. Those who are expecting the ringgit to fall to 4.2 are really trying to embrace the worst and being quite pessimistic that things will get very intense between the United States and China. Typically, the ringgit has so far been very resilient. Again, it's the only emerging market currency this year in the region that's up against the dollar. Indian rupees lost over 6%, Philippine peso over 5%, South Korean won and Indonesian rupee have suffered similar losses, where the ringgit's actually in the green, which is very positive. The economy is performing resiliently well. Economic growth is definitely going to come in above 5% this year. It will take quite a deterioration in data to really cause a lower GDP reading than this. And I don't see the view that the ringgit should fall all the way to 4.2, potentially 4.1, but that would depend on two different things. One, risk appetite be getting a lot worse, where investors do not want to invest in emerging market assets. And secondly, the dollar getting much stronger. If investors start taking profit off the dollar over the near term, there's nothing to say the ringgit can't fall back to 4 and then below 4.
Let's talk a little bit about what the statement has been given by the Prime Minister, Tun Dr. Mahathir, earlier this week. He said that the major sell-off that happened right after the elections and following very conflicting statements from this government versus the previous government, things like our debt is actually 1 trillion ringgit and not 600 billion ringgit, our the costs for some of the mega projects like the LRT3 is actually 31 billion ringgit instead of the previously announced 15 billion ringgit, ECRL is at 81 billion ringgit instead of 50 billion ringgit. All these numbers, one negative commentator or one person that is taking on the opposite side is basically arguing that this new government is over-exaggerating some of the figures. Another commentator is saying that no, these are the true figures that the previous government have been withholding. And we've seen sort of like a sell-off, not a sell-off, it is a sell-off by foreign investors. How do you make of this? What do you make of this? What's the story that we can see here?
There has been a sell-off, and there was definitely some turbulence following the election surprise. There's no dispute on this. However, the emerging markets in general have suffered because of this trade war dispute. And the external market and the external market conditions are still providing at least 95% of the weight for how emerging markets trade. Under the notion that Malaysia's debt would be very bad and that these figures could be correct, there's a lot of exaggeration. If that's correct, then the ringgit would be trading a lot lower than what it currently is. And so would the local bourse. Generally, investors need to realize that Malaysia is very connected to the global economy. The global economy is so modernized in the current day that something could happen in even Turkey, where they've had their own political crisis, and it causes turbulence towards the local market here. We saw this actually in the run-up to the Turkish election over the past couple of weeks. And generally speaking, this is more local and domestic news, but its impact on actual capital markets, and especially the international markets such as the ringgit, is more muted. The election caused some turbulence maybe the first week. Since then, it's been global market, Federal Reserve headlines, US trade war concerns that's really providing the influence towards how the ringgit trades, and similarly to the local bourse.
And of course, speaking about the local bourse, it has been trending downward. The FBMK LCI actually started strongly the week after the elections, about over 1,800 points. Right now it's at 1,600 plus points. Do you think that there's a fantastic article on Bloomberg actually saying that now investors are shopping for bargains right now. Do you think that there's some truth in those kind of headlines?
There is, because emerging market stocks have been completely sold off very heavily on these trade war concerns. And again, it's concerns that things are going to get a lot worse with this dispute between US and China before they get better. Emerging market currency valuations and emerging market stocks look very cheap right now. So let's say that there is a middle ground, that China and the United States become better friends again, and that this trade war potentially does not unfold as heavily as it could potentially can. Then the emerging market stocks and the currencies look very attractive.
Let's talk a little bit about your home country. Brexit is dominating the UK landscape right now. We've seen two very senior Secretaries of State resigning, David Davis, and as well as my favorite guy with a favorite haircut, Boris Johnson has left. We're seeing a significant contrast into what needs to be delivered versus what is being delivered. Do you think that this is the biggest crisis that has ever befell on that island since, I don't know, World War II?
Brexit remains as much as a mystery today as it was the day after the vote. There's no clarity. I think there's been clarity over one issue, and the United Kingdom's supposed to be leaving the European Union at the end of March next year, and nobody really has a clue what's going on. If there's a currency out there that is proven it's very sensitive to political risk, it's the British pound. And it's not just because of these two lead negotiators in the Brexit debate actually leaving their positions. There's now concerns that UK Prime Minister Theresa May will once again see her leadership position challenged, and that there could once again be a UK election. I don't think this will happen, and it would be very horrible news, because the UK really needs consistency right now. Specifically when they're supposed to be negotiating with the European Union, they're supposed to be sorting out that future, what happens with the custom agreement, what happens with the border, and we're 9 months away from the UK leaving, and it's very uncertain.
When it was announced that May 2019 was the date of Brexit, nobody sort of like, it seems too far away, but right now it's literally around the corner, as you say, 7 months away. Do you think that emerging markets, particularly countries from South Asia like Malaysia, would have better negotiating opportunities right now if we set up camp in both the EU as well as the UK? Do you think the opportunities would present itself, but in a very handsome manner?
Potentially, yes, because both parties are looking to get the upper hand to say that they don't need each other so much, or that they can make other trade agreements. Of course, when you've got these concerns over what the United States and their own trade might do with Europe, you've seen this dispute between Harley-Davidson, Levi's, European Union are threatening to put even more tariffs on the US. They will retaliate hard. And all of these economies are looking for new trading partners. There's still a big opportunity for Malaysia as an export nation, as a nation that's very reliant on trade, to go out there and get good agreements with both the UK and Europe. So yes, it's something that can definitely help the economy. It would be positive, and it would probably offset some of these pressures over whether there could be a reduction in trade from China and the US, because again, nobody really knows what's going to happen to trade with China right now. Because there's a potential trade war, maybe China will be less open to importing as much as they have in the past, because lots of regional economies and economies specifically in this market and this region, are very reliant on trade from China. Even developed ones like Australia. The Aussie dollar has suffered heavily over the past couple of weeks because there are concerns over what a trade war between the US and China might have on an economy as developed as Australia.
And of course, I literally just came back from China, visited a few cities there. Prior to this trip, I went to Hangzhou, I went to Guangzhou,
Sure.
Beijing, Shanghai, you name it, Shenzhen. It seems like they can be very well domestically supported. They don't need that much trade any longer. This is not the old China, this is the China of 2020, 21st century China. Do you think that in the short term we'll see a more protectionist China being built, something like a MAGA for China, make China great again kind of concept?
I agree with you that China does not need its trading partners as much as the trading partners probably need trade from China. China is very domestically reliant. Construction, investment, private expenditure. The retail sales in China alone are unbelievable. These figures for a number of years now have been pointing out consistently above 10%. There's no shortage of disposable income, and there's no shortage of consumer spending and sentiment in China. And yes, it could quite well be that case, that China's in a much better position than people think. And sorry, but I've kind of forgot the second question that you asked there as well.
Which is whether or not they will see a new, MAGA version or Make America Great Again version of China. Actually,
China at this point, my view is that they're very committed towards saying to the global economy, we want to be a major power here. The One Belt, One Road initiatives is one example of this. And I also think China will not want to lose foreign investor confidence at this time, because everybody's waiting to see how China might retaliate or react to what we're saying as President Trump firing the first shot. Last Friday morning, he announced that he would confirm the tariffs from China, and everybody's waiting to see how Beijing might react, whether it could devalue the yuan, I doubt it, whether it could sell US treasuries, more likely than devaluing the yuan. But what China doesn't want to do is is lose face. It doesn't want investors to lose confidence within China. It doesn't want capital outflows to be high. So I don't think they will embrace their own protectionist measures as such. However, they have made it quite clear they will not let the United States push them around either.
And of course, speaking about the United States, a lot is happening in the United States, all the way from the hiring of the latest Supreme Court judge to the current ongoings at the US Federal Reserve. Do you think that heading towards the midterm elections of 2018, President Trump and his houses, both the Congress and the Senate, might see some significant changes in terms of personnel?
Personnel remains a revolving door in the United States. I've lost touch really on how many times personnel has changed since President Trump became, well, the President of the United States. Before the midterm election, the US administration are definitely trying to prove to their supporters that they're backing what they said in the campaign. They're embracing protectionist policies, they're going to give fiscal spending, and all of these other measures that President Trump, well, before he became president, promised he would do, he's trying to prove. Do not forget here that President Trump might just be doing this trade rhetoric just to get a better deal with China, just to get better trade deals, because he's a negotiator. Mm-hmm. It's very clear. And if he does get a better trade deal, he looks like a hero to his supporters. Last time we were here in the studios at the end of last year, we spoke about the US and North Korea tensions. Nobody would have thought a couple of months later than that President Trump would become the first sitting president to meet the North Korean leader. But he achieved it and it happened. And he might just get better trade deals out of this, which is going to help him before the midterm elections. And perhaps this is the strategy here, to get as much support, to prove I'm doing as much as I said I would do, so that I do become successful in the midterm elections. This could be the play here.
Let's talk a little bit back into our home ground here in Malaysia before we wrap this interview up. Corporate governance is the topic of the day. A lot of people are keeping a close watch, not just on the current trial that is going to take place on the criminal breach of trust by the former Prime Minister, Datuk Seri Najib Razak. There's also conversation on the arrest or the imminent arrest of 1MDB mastermind, so-called Joe Low in Macau or perhaps in Hong Kong. There's also the appointments and firing and appointments of individuals pertaining to the 1MDB investigations, including the newly appointed Bank Negara Governor, including the re-emergence of Tan Sri Zeti, the previous Bank Negara Governor, and many others. Do you think that these conversations are being, it is tantalizing to actually keep watch of these kind of events from a local perspective, but from foreign perspective, is this something that is piquing their interest?
Not so much. I think that foreign investors will obviously monitor local news, but the impact local news has on the economy and on the market is insignificant now. For example, he's an ex-prime minister. Yes, it does not look positive, and it's certainly very big political news, but it's not something that's going to discourage investors from investing in Malaysia. If that was the case, over the past couple of weeks, the ringgit would have fallen much more than what it has. Same with the local stock market. Changes within the Bank Negara and so on, they are interesting, but it looks like the situation is under control, and it looks like the Bank Negara will have its interest rate decision tomorrow and so on, and it doesn't appear that it's really worrying investors. Like we said, Malaysia is outperforming its regional peers at a time of very high volatility.
And some of the guidance given by Moody's, as well as local rating agency RAM, shows that it's pretty much the same as before the elections. They've already discounted the political risk as being a core thing to be looking out right now. They're looking more like currency risk and many others. Do you think that we can actually tuck the political risk conversation away, at least for the Malaysian market, the same way that, say, the UK can't possibly do because of the rising political risk there?
I do say so, and I agree with these statements actually, that it's already been discounted, it's already been priced in to a degree. Yes, it's a headline that will keep getting attention, however, it's a political headline. In terms of what it's going to do to the business and market, at this point, it's very limited. A lot of this had been priced in, had been factored in a long time ago, and now Malaysia has to, remember it's a global economy, there's a big global trade war that could be on the horizon, and we really need to monitor such risks. There's a lot to be positive about here. Economic growth should still go above 5%. Yes, it's last year was an outperformance in general, so it does look like slowing growth compared to last year's 5.9%. However, the local economy is still performing well. The GST tax removal should help consumer sentiment at a time when nobody knows what could happen in the global economy. So it could help consumer spending. There's a lot to be positive about here, and it's important to forget the past and really to embrace this new future and to look at what could potentially happen in the future with the global market, because this is really what still impacts the ringgit, is the external factors, and this is really 95% of the contributor towards the volatility as well.
Thank you very much, Jameel. I've been speaking to Jameel Ahmad of FXTM. If you want to watch more of this kind of interviews, just head on to awanireview.com or astroawani.com. Follow us on Twitter at 501awani. I'm Ibrahim Sani. Thanks very much for watching and goodbye.